My name is Murat Unal. I'm a doctoral candidate and senior researcher with IE Business School, but at the same time the Chief Executive Officer of Funds at Work. I was asked today to talk about corporate governance, which is actually my specialization area. Now, as you know from the traditional system of banks, we have in conventional banks either a one-tier or a two-tier system. In Germany, for example, a traditional bank would be including the executive directors as the managing part within the two-tier system and would have a separate supervisory board. In the conventional banking system in the UK and the US, we typically have a one-tier system with the executive directors on the one hand and independent directors on the other. Now, when it comes to Islamic finance, we have some added components to the governance structure, and one very critical component is the Shari'ah board. Apart from the Shari'ah board, certainly the internal review and audit department, but also the compliance officers. Now, I'm going to focus on the Shari'ah board. As some of you might know, we have been engaging for the last 2 years in social network analytic research, looking at relationship patterns of Shari'ah scholars to financial institutions across the world. In our latest work, what we've actually done is we have also looked at the governance standards that are recommended by leading standard setters such as IOFI or IFSB, but also regional standard setters like Haukama or supranationals like the OECD, the World Bank, the IMF, etc. Trying to make sense of all the recommendations that are out there. Let me give you some examples in terms of some of the things that are not resolved so far. Now, when it comes, for example, to the IFSB, and we're talking about the minimum qualification of Shari'ah scholars, the IFSB stance is to have at least a bachelor's degree from a recognized university. Now, in our research, we actually cover over 102 universities. And the question that immediately comes up is which university is recognized and which not. When it comes to aspects such as rotations of chairmen within Shari'ah boards, there's a clear recommendation that there should be a rotation taking place within the Shari'ah board. But is this something actually that is taking place out there? And do we have the mechanisms to measure rotation within those boards? Another clear recommendation is to have an independent nomination board for Shari'ah scholars. The question is the process that we have so far across the world an objective one? Or do we have other factors that lead to the nomination of Shari'ah scholars? Now, as we can see in our research, social capital, i.e. the links of people to each other, most likely also play a role. So in terms of the governance aspects that are currently out there, specifically with regard to Sharia governance, there are certainly numerous aspects that we still need to address. And this is something that we are right now focusing on because by bringing in hard data, objective data, that was rigorously collected, we would like to give a different view of Shari'ah governance. And perhaps in the next step, what we also would like to do, we would like to rate companies on their governance match. What do I mean by that? Imagine you have the data, such as we have, for example. Why shouldn't we control whether Islamic finance institutions really employ nomination boards? Why don't we control whether they have Sharia review units or compliance units? Why don't we control whether nomination at the Sharia board level takes place objectively? Why don't we look at rotation mechanisms? There are so many recommendations that standard setters are putting forward, which are all not, I must admit, optimal. Because some of the recommendations go as far as to, for example, give Sharia scholars also a membership in the executive board. From a corporate governance perspective, that is probably an infringement on the checks and balances within the system. And what's also important, and this actually affects the industry as a whole, we have to make sure that on a structural level, that the people who actually govern the boards in the Islamic finance institutions are not necessarily always the people who govern the standard setters. Because in the traditional corporate governance system, these people are kept separate. So in creating those checks and balances, working together with the Sharia scholars, we actually have to make sure that we somehow find a system that balances out the need for greater standardization with the help of specific scholars, but at the same time creates the checks and balances for the overall system as a whole. Now, if we talk about corporate governance in general, you might ask yourself, what is corporate governance all about? To put it in very easy words, it's actually the sticks and the carrots you provide to market participants. You provide carrots, i.e. incentives, to align them with your interests. On the other hand, you have the stick, which is clearly the monitoring aspect of corporate governance, to make sure that people actually stick to the rules. Now, when it comes to Sharia governance, one of the things that we have, for example, found out is that there's quite a concentration in the overall system. Now, we have 20 scholars that make almost 55% of the overall board positions across the world. And we have another 260, probably 300, that cover the remaining boards. And what's more interesting, when you look at the affiliations of scholars among each other, you'll realize that the collective wisdom of those scholars is actually concentrated in specific boards. So if you take two prominent scholars, for example, the likelihood of them sitting in the same board is very, very high. What does that actually mean? By the end of the day, if these scholars would sit on exclusive boards, they would actually provide their services to a much wider audience, as the situation is today. Because of the concentration of Sharia, I call it power, of very well-known scholars who certainly added a lot of value to the system, we don't have the capacity and resources to actually make their insights and wisdom available to a much broader audience. On the other hand, if you concentrate Sharia boards in a way that they're only or mostly dominated by very prominent scholars, how can you account for the government, or let's say the central banks and standard setters' recommendations for succession planning? Because when you want to engage in succession planning, you need to include junior scholars, develop them accordingly. How can you engage in mentorship programs if a board consists only of senior people? You have to have somehow the mechanisms to make sure that the current generation of Sharia scholars is also much more active in developing the next generation, because that's very important. Creating more visibility for the next generation, as otherwise the growth of the Islamic finance industry might probably not be as sustainable as it could be if you included a much broader audience of people throughout this process. We have hundreds and thousands of people actually graduating each year from different universities, joining Sharia audit teams, joining compliance units, being secretaries, joining Islamic banks. So these people are actually also aspiring for a future of probably becoming a scholar themselves. So we have to have some mechanisms in place to also give those people a chance to basically join into the boards, which actually will come at the advantage of the most senior scholars, because they don't have to do away with all their boards they currently possess. But by deconcentrating, meaning by sharing more time with junior scholars and less with their senior peers, what they will actually do is they will use their time in a manner to account for the numerous people that are up there that probably would like to become scholars themselves and also contribute to their further development.